General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. We looked at that daily. We gapped up to that minus 2.7. Let's go. We almost to this H4 618 and to this 26,000. We going crazy. Man, market sentiment right now is just buy everything except for gold. Today is the 27th. Yeah, that's the 29th. That's Wednesday. That's that day. Monday, no trading, just planning. So, good thing I knocked out all the swing trading charts. So I can just chill. Pretty much a one-sided delivery day. Knocking out a bunch of targets and creating a huge gap. Market sentiment right now is bullish. China deal talks in the air. And you can tell by the charts. Okay. Let's go to the H1. Just a long update. Let's just knock out this since that's, remove that. It's probably locked too. Yep. Now we actually got price. We don't need projections. Let's take this off too, since we got price here now. Do we need more project? We probably do. It's crazy. I think the key thing is gonna be the low of this day. This Monday's low. It's definitely a draw on liquidity for me. I want to target it, especially how we opened. I know it's a flat bottom day. Pretty sure it is. Oh no, it's not flat bottom. It looked flat bottom on Forex. Hold up, where it go? Let's keep this here. Arrays, none. Inefficient areas here, here, and here. The only good array to even mark is here. Because this is the last down candle. We can't even do open price. We gotta respect the wick on this. So retracements here, this could just create crazy buying. All the actions on Wednesday with earnings, and that's it. We're not gonna put no more. Hold on, let me throw uncharted territory on here. I think it's blocked. Let's see if it's giving us some cool levels. Nah, we way above it. We gapped a bit. Let's go to the daily. We probably still way above it. Oh nah, there they go. All right, so suspension block. Shout out to NASDAQ. This is now officially the largest suspension block in history. I kind of feel like I want to draw it like this. It's so big. That's amazing. I think the only way I can annotate this to not bother me is to put a line here as the start of it. And this is just week open price. Amazing. 26,000. Here we come. Let's go. We'll be there tomorrow, really. I might as well throw these up here. Because we might get there tomorrow. What is this? 26,487.85. That's a strong level. Yeah, definitely strong. So we going higher. Did I get the hour chart? Nah, this wasn't really that much I added to it. Just the low, the open price of the week, and the last down candle. I like how we have a target right here. Where's that daily target I just made? I think that's it. Mm, Hmm. Then let's get the daily chart. And put daily here. Hmm. Okay, cool. Nothing new to add here, except the last down candle we had in 1, 2, 3, 4, 5, 6, 8, 9, 10 hours. In 10 hours. That's 100. Get the daily. Um, daily suspension block. It's interesting. I'm pretty sure there's a whole bunch of people want to sell that just because it's not even really a reason. It looks like we're in premium. We should look for sales. Let's go to silver. So we should look for sales on this since this week should be bearish. Okay. Started off strong. Will we get a chance to go above this high? I don't know if we will. Nice little reaction off of this bullish level we have. This is a very thin day for it to be not even taking the high. Wednesday was the last day to get both sides swept. Oh, watch 50% here. So I would want to buy above here. I would want to buy Asia high. Asia high be staying on silver. That'd be it. You'll be looking for it. You'll just be standing outside. Because Asia high Monday. That's the only thing I see, just one sided delivery. Looking for buys to go up here. Buy to sell ideas. Okay. Asia high looks ideal. 2 pair orders. And start stalking sales. You might not get it though. Waiting on retracements is crazy sometimes. inefficiency filled. Yeah. And what do we got here? It's probably another inefficiency. Weekly fair value gap kind of dealt with and kind of came to here. Weekly volume imbalance. Yeah. Perfect wick. So smoke the fair value gap. Let's take this off. Hit us a little bullish order block. Kind of respected this old high right here. That's interesting. Yeah. I still want to see a run maybe above. Yeah, Asia. We probably don't even really need Friday. Look how far we dropped to. Reselling this mitigation block makes sense. hmm Okay. Yeah. We don't really have to add no arrays because this level here is kind of paired. We created an order block. We pushed down, pushed up. Then we wicked that high and sold off. This open price. Just make it white so it can stand out. We can look for a setup here, especially if it's New York prime time, doing what it's supposed to do. Watching the H1 bearish order block. Key level for sales. We might not get a retracement, or we might not get a buy side liquidity run. Let's go to the daily. Yeah. Yeah. See how much volume that is pushing us down. This is the weekly volume imbalance. We got us a new week opening gap here. I think next key level would be this swing low here. But really, I would go mm, after here. We really don't got nothing stopping us. We got us a 40-day, a 20-day. I'll take the 20. $20 bank level. Sale retracement H1. This is fresh level. Engineered liquidity. Kind of low resistance. Mm-hmm. Like 20-day bank level. 2 offload shorts. So selling retracements makes sense. Let's go EU. Okay, so choppy day as usual. The EU chart be so fast to journal, you can just put boo and then go to the next chart. Choppy small range day. We do have Fed fund rate. Note the XC is selling, so we should be looking for buys. In a risk on environment. Let's go here. It's ugly. This mitigation block is not working. We could break through it and reuse it as a level, but just looking at this old gap, we got a bunch of gaps chopped up together. It's gonna take something big to get us out. So bunch of the weak opening gaps all close together. So we need speed to break out. I'm still bullish. But I kind of prefer to see Better stop hunt and displacement before engaging. Before engaging, because to me, this looks like chop is still. Mm-mm. Let's go to the daily. Okay. So we got a cool little gap. Um, this is the daily bearish order block. It's not being respected. And I believe this is the new week opening gap, pretty much. We put wicks through it. We'll see if we retest this open price or run this low. Like Tuesday low of the week is classic EU vibes, and that's a small range Monday. So Pablo here. I do need a, yeah, it does need to stop hunt. We had 3 consecutive up days. A good stop hunt to take out this low. Take out both of these lows of the week, and then it's okay to take the high. I don't know why we didn't take this old weekly low. If I'm looking for sales, I would want to sell this failure swing. That's about it. And the only idea would be if we get here, get out here. If we get here, get out here. Consolidation range scalping for EU traders. Y'all probably should just look at something that's not paired with dollar. For the government's not shut down. Okay, trapped order flow. So consolidation market protocol where we trade back to EQ and wait for price to hit the extreme. To hit the extreme. All right, so framework. It's Monday. Yeah. I want to see some rates. Let's call it the 2022 model. Boom. All right, that's that on that. Y'all have a good day. Peace.